Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar trying to reassert itself again after, really can be described as nothing short of just being absolutely impressive. When we take a look at the dollar here, if you think about this, that was one of the things we had mentioned, or not mentioned in the sense that something's going to change, but that we'd already had, look at this, 8 successive rallies. So, we come back here, and if you look at the difference in the bars, I mean, quite often the dollar index and the cash index and the inverse euro trade inversely. So we'll take a look at the euro here. And you can see in this bar right here, we basically engulfed the prior bar, and it looked like we were due for an oversold rally. Nothing fantastic or anything. I remember, in our Asian analysis, we said, hey, look, the euro's not out of the woods yet, but we thought, but I said an oversold rally is due or reasonable to expect. But we saw the dollar come back so impressive here, and I guess I don't know if it's whether it's impressive or the euro is just so woeful here when we come back and click on here, how we're able to turn around and just engulf the prior body after it engulfed the other one before. This was even more impressive, and of course we closed below 1286. But getting back to the cash dollar index, look at this, 8 successive gains. You're like, okay, now we can see a pause. I mean, we even said, hey, look, if we start to slide back, we have some support at 96.48, but the market could potentially push the bulls down to 96.30. Well, we turn around and we reassert ourselves, and as I mentioned in the chat room, there's some minor resistance here at 97.31. Someone had asked me as we had just got into Asia, hey, do you see anything here in the cash dollar index? And they were looking at more longer term, but I pointed out that we had some resistance coming in right there at 97.31. Coming across here, let's take a look if we can. There we go. You can see coming across right there. And you can see this coming back here. I'll show you. Right there. You see that? 97.31. There's actually the more closer one is 46. If we're going to make another push, it's impressive to say the least when you think about how far the cash dollar index has already come 8 times. Backs off, probably looks like maybe some late bulls might be stuck, might get a little bit more selling pressure, and instead we reassert ourselves even higher. When we look at the cash dollar index here, though, let's take a look at it here on the daily. The real resistance really is not till 97.64. There's a pause here around 46-ish right there. You see there, but the real resistance we're going to push is 97.64. We're going in. Let's just allude to our analysis. We'll just take a quick roll on the news. And this one's fairly simple. Since the cash dollar index continues to impress, next upside target is 97.64 with a level of 97.45. Well, it's actually 97.46. Support wouldn't come down till about 96.57. And once again, it's, you're looking at it and you're thinking, well, where is there, to go with this cash dollar index? And essentially that's it. It just doesn't come into about 97.64 with the pause that we just described here at 97.46. There's a little bit of minor one here. The interesting thing, and we'll take a look here with the euro. Says a day after posting a bullish engulfing candle, the euro bearishly engulfs the prior day and closes below 1286. The market quickly challenged 1250 as trading moved into Asia, only to lose its momentum. exponential moving averages are stretched. The downside target is 1219 with upside resistance at 1298. Well, this was rather interesting. I mean, I remember looking at it late in the day. I'm thinking, heck, you can just get short just for them to just challenge the 1250. And sure enough, as it started to get towards the end of the New York session, it started pushing a little bit lower. And then as soon as they opened in shortly right after that, bam, it quickly went for the 1250. And then there was no real follow-up, though. It was interesting. You know, you would thought even in the quiet time, they would probably push it. You'd probably see a move probably like to about maybe the upper 1230s or something, hit those stops. But we actually just barely triggered past 1250. Take a look at that. You can see here we barely got below it, and then we quickly came back, and then we spent the rest of the time moving up in here, all the way up in here to the latter part of Asia before turning lower. And we had gone and put there on an Asian analysis, and I do post this analysis, you know, like I said, during the Asian time frame. Upside resistance is 1298, and you can see here we ran out of gas right there at 1295, so 3 pips away, and then we just turn around and start to rotate lower. You can see where we came up. There's a 1298 right there. You see, so we just came up 3 pips shy from that, and then now we've turned around and rotated much slower here. Once again, look at the Shiro. It just seems like the siren song for the seaman. It's 1219. It just at this point, and we almost made it to 1298. We came up 3 pips shy of that. That we just, you know, market just has, you know, it feels like it's just going to be drawn to 1219. Going to have a tough time. And actually, you know, quickly losing this again certainly pushes that momentum, like as if it wants to move lower. And I guess it's a matter of, you know, how much further we push here in the cash dollar index. Another thing that I thought I did go on and post and share, I didn't post in the Asian analysis, but I posted the chart. It was here with the dollar peso. I started going in and trade the peso, and one of the things I pointed out was we had some good resistance right here at the 1945. And I posted this. We were actually almost right there, if I believe, at the time. But I posted this chart in the Asian during the Asian time period, and you can see here. Look at here. We're actually showing this on the 2-hour. You can see this level 1945.7. I posted that with the market. This is 161% right here. So I thought there was a pretty good little move here. We'll go on. And you can see that coincided right there. You see, great confluence here. And we're seeing the market kind of push off from there. So we may go and take a little bit of a respite here from this area here, and then maybe try and ease back a little bit. Interesting considering that the dollar's still holding its own right up in here. Another market of note is going to be right here with the dollar yen. And we did make a trek towards this area that we have here of 1095. And one of the guys was asking me in the Asian session, because I was pointing out here throughout the chat during the day yesterday, hey, 1095, then it kind of market would kind of roll back a little bit. And I go, oh, here we come back to 1095. And that is a very good level here. Look at that. But someone was asking me, you know, they asked me, hey, look, well, what do you think about this 1095? And we actually came up here again. We got up right when the dollar taken off. I think we got up to about 1103, I think it was. And we actually came back to about, I think it was 1080-ish, I believe. Like 10, I think we came as low back as 1085. But here's the deal is, look at this. I told him, I go, wait till let the market tell you that it's time. I think that this is a good level and a good area for the market to take a respite from. But that's a tough road to hoe when you got the cash dollar index. Look at this, just continue to push higher. Now, I posted this a little while ago, that resistance at 97.31. We're kind of backing off a little bit. But that being said, like, you may want to be just exercise a little bit of caution, because as we've been saying for the last couple of days, is it sure makes it a whole heck of a lot easier when you got some momentum going for you. And I know I myself been the kind that I end up trying to sell up against resistance, trying to pick right at the very top when it's going to turn or at the bottom. And we mentioned this yesterday, as Art Cashin likes to say, it's the second mouse that gets the cheese. Well, it's a lot easier to go with it when you start to get the momentum, going for you. One thing that we can go and take a look at. We referenced to also. Look at this 2761. We're going to pull this up on the 2-hour chart. There you go. You see? Right there, coming right across, actually all the way to right here. You see that? Well, when you look at that across, there is some good little resistance right there, 2762. Could this thing try and push even higher? Anything's possible, but we've stretched this thing for about all that it can. And, it looked like we could even push a little bit lower. We talked that we almost had like a little head and shoulders pushing, working lower. And the market, I thought to myself, knowing the S&Ps, it was late in the day. I thought, you know what, they're probably gonna. And then we were just sitting there around 27.51, I think 52. And I thought, you know what, this thing will probably try and push one more push. Well, look at that. We just took out the highs here. You see that? And we nicked that 27.62, and now we're pushing back. I think we've pretty much had a pretty good stretch here in the S&Ps. Keep an eye, like I said, you don't have to rush into the Dalian. I think the Dalian, if we do rotate lower here in the S&Ps, let's go back here. You think of it, we're already at 111. Okay, so if we start to get a rotation here, this move is probably good all the way down to about 1034, which isn't bad at all. Okay, let me see why this thing is pushed all the way here. There we go. Right there, 1095. But this would probably be good, just for starters. If we see the S&Ps pull back, good for about 60 pips to start with. If we see it, then we'll find out what happens further on here. But that's a very good area, that 1095. But you got to let the market tire itself out. So anyway, that being said, we'll quickly move on to the news. One of the things that we're referencing here, not referencing yet, but the German economic news came out, and it says just escaping recession. We see here we came in just escaping because we've been having just some absolutely poor data. Still weak, but I'm saying is at least they avoided the recession. At the top of the hour, we do have Eurozone employment, Q4 overall flash, and Eurozone GDP also coming up at the top of the hour. Well, let's go and quickly move into the news. We spent a little bit of extra time reviewing this because we're a pretty important juncture, I think, here with the euro itself. Here is that it's you would have thought, I would have thought that starting right out of the gate, we probably would have weakened here in the euro, and they started that, but they couldn't get any follow through past this 1250 here. So let's go and take a look at where we stand right now, and quickly hit this, and then move right into the analysis. Well, tonight's Brexit vote in the UK Parliament will, at most, serve as a guide to the mood in the restive assembly after PMA moved to once again delay the real moment of truth or till the end of the month. Local media say she faces a symbolic rebellion from hardline Brexiters who will refuse to back on anodyne government-sponsored motion making renewed support for the Brexit plan. Separately, the intermittent speculation about a schism in the opposition Labour Party has risen, with reports that pro-EU lawmakers are on the verge of leaving the party if leader Jeremy Corbyn does not come out squarely in favor of a second referendum in a subsequent vote set for February 27th. For now, at least, that is the date everyone is focusing on, with hints that a number of May's ministers will also choose that moment to put their jobs on the line and demand no deal be ruled out. For Eurozone watchers, news that France's Q4 jobless rate unexpectedly fell to its lowest level since the start of 2009 will likely be overshadowed by the glum GDP readout from Germany. Growth was flat at 0.0%, which just showed that in the final quarter of last year, meaning the region's largest economy escaped recession by the narrowest of margins after contracting in the July-September period prior for the first time since 2015. Moving on, an alarming slowdown in the European economy at the end of last year was underlined on Thursday by news that the German economy stopped growing in the final quarter, and following yesterday's data showing Eurozone industry contracted at its steepest annual rate in almost a decade in December. Yet while the German GDP print was below census forecast, it did allay at least some of the worst fears that a technical recession could have been recorded over the final 2 quarters of 2018. And significantly, China's export and import data for January came in well ahead of expectations earlier. Some relief for investors will see it as a sign of some recovery in the global recovery. More generally, as we enter 2019, Japan's Q4 GDP release overnight also showed the economy expanded 0.3 in the final market as forecast. For world markets eyeing the U.S.-China trade talks and the latest Brexit voting in the parliament, the economic tallies were mildly comforting. Euro-dollar firmed at about 0.5 cent for the 3-month low set overnight at 12.90. Remember, we made up to 12.95 with our Asian analysis. What we were saying about the resistance was going to be 12.98. Asian stock markets were flat to slightly higher. Okay, starting was mixed ahead of the latest parliamentary vote. That's the so-called meaningful vote of UK's PMA's withdrawal agreement will now take place on February the 27th. On European corporate front, the earnings sessions continues with Airbus, AstraZeneca, Commerzbank, and Credit Agricole, and Credit Suisse, and Nestle's. And let's go on and quickly move on. Eurozone bond yields steady as Germany escapes recession. The Eurozone government bond yields were mostly steady on Thursday, with data showing Germany just escaped recession in the final quarter, but with negative news on now pricing the market and the benchmark 10-year bonds trading close to their lowest levels in 2 years. German economy grew by 0%, the data showed, compared with Reuters' forecast for about 1/10. The whisper estimate was even lower, so that's why the immediate reaction was a rise in yield, said Norbert Wulte with Landesbank. There's basically two things weighing down on the yields at the moment: Brexit uncertainty, and in the past 6 weeks, increased attention to negative data surprises and the possible repercussions for the ECB. And quickly, Australian New Zealand dollars cautious. The Australian dollar was up 0.3 to 71.09 after hitting more than a 1-month trough at 70.54. The Aussies lost almost 2.5%. Nick Tweedale with Sydney Securities also eyes moves towards Beijing, given the trade talks. Only evidence a solid deal going forward will dispel the investor caution and global growth fears that have now been a feature of the trade environment over the last year. Expectations for a dovish signal were rife after a similar move by the RPA. The RBNZ's neutral stance was in a stark contrast to last week's more dovish comments by the RBA's governor on why New Zealand's dollar appreciated against the Australian dollar. Capital I Economics wrote. And the dollar edges higher as the euro sags. The greenback was earlier this year by the Federal Reserve shift to a cautious policy stance. It mentions the Australian dollar, which we just reviewed, considered a barometer of global risk and appetite, was up 0.3 at 71.10, having gained on a previous session on optimism at the China-US trade talks. That contrasted with the wobbles in the euro, the single currency which has around a 58% weighting. Remember, it used to be 56, so I don't know when that ended up moving up to 58, but my thing is always was 56.3. Has tumbled 1.63%. Eurozone industrial production has fell more than expected in December. Broad risk appetite in markets has been on the uptick in the past couple of days on rising expectations of a breakthrough in the trade impasse between the U.S. and China. President Trump said on Wednesday the talks with China were going along very well as they try to resolve the tariff dispute. And lastly, here with gold, if you look more broadly, the Fed is unlikely to raise rates in an environment situation where inflation is still low. The data was supported for the dollar. A strong dollar is pressuring gold prices, and physical buying is also limited, said Peter Fung. You saw we had that run up in gold off of 1309. We think we rallied up to 1307 on the XAU, and then the market just trying to gain back those gains. So we're going to move into the analysis now. As I mentioned here, when we went into the Asian analysis for the euro, day after posting a bullish engulfing line candle, the euro bearishly engulfs the prior day and closed below 1286. The market quickly challenged 1250 as trading moved into Asia, only to lose its momentum. The downside target is 1219, and that just simply doesn't change right now. And we put upside resistance at 1298. The market got to 1295 and rolled over. So we're set there. Let's go move into here. There we go. So we're going to be looking for 1216 potentially, and I meant to say 1219. I think when you look at this on a 2-hour chart, I think we'd seen before some support. I think around 1235, I believe it was, but I think that 1219 is just going to be huge. Yeah, right here, 1234. Right there. You can see that 1234. So maybe a pause, but this market certainly looks set to go after 1219. With that, let's go and move into cable. Well, we've made it down here to 1220, 2820. That was our support. So nothing changes here. That was the support that we had. I thought we had, we keep mentioning before, and the market moved higher. So that's our support level we talked about, 2820, and that's where we're at, and that's what we're going to go with, 2820. Obviously, the concerns about the vote may shake things up a little bit, but 2820, this is a level that we had mentioned, I think, at the beginning of the week, saying, this is some very good support in here. You saw the levels coming across, and we certainly made it down here to 2820 now. We've actually gotten a little bit below it, but I like that level, and that's on a closing basis. You can see the support here at 2820. Right there. There it is, 28.22 on the 2-hour, but 28.20 on the daily close, and we dipped just a hair below 28.13, but we're defending it. We're up 15 pips off the lows. I like that area here at that 28.20. Moving further on, we talked about the Aussie dollar and had things shined up a little bit. They're still looking for good news coming out of the Asian, China, U.S. talks. We had 71.42, and when we look at this, There's that 71.42. We made a run up in here. The prior day we came pretty close. Remember, we said, "Hey, look, it's going to stay the same until it breaks it." We got up as high as 71.36 on the latest move here. We got up as high as 71.32, 31.7. And we've kind of rotated lower. I think that the concern, as Nick Twidell stated, is unless we see something really solid, it's not going to change things, and it's not a surprise we've come down here. Although they're a little bit juiced about these talks, thinking Trump had said, "Oh, things are going great." You never can tell with that guy. He might, tweet in a couple hours, "Things are terrible now." Let me see. But we'll see what we can go to. Obviously, here, like we talked about this, if you get some good news, this thing's going to rip up and it'll be looking around the 72 cents. But for right now, there's a resistance there. Nothing has changed. On the downside, we referenced 70.94. I'm actually going to look for a little bit of a test back in here. If you see this failing twice, if it does, and we finish it lower here, and if we take out on 2-hour close, if we take out 71.06, we're going to have to come down here and test this area here, which would be 70.84. So we'll move that support just a little bit lower. And let's get into the dollar squares. Well, we put up this move up in here to 101.08. There's our resistance coming across here. We haven't quite made it. We came close. And we actually, if you look at this, we took out this high just by a nudge right there. Oh, God, just by the ever slightest bit. Just a bare nudge that we took that out. We almost made it to the 101.08. 108. But we took it out by just a nudge. I mean, actually by about actually a tenth of a pip, I think it was, or 0.2 of a pip. So it'll be interesting to see once again how this dollar, when we look at the dollar, yesterday I thought, the people that would have come in late, they may have found themselves looking for any kind of rally to exit, and we had resistance at, I believe it was 96.94, and then of course the old level 97.09. But look at us right now. So it's going to be interesting to see how this thing plays itself out. Probably isn't no reason trying to go against it, and the euro seems like it probably just looking to make that move eventually lower. I'm just surprised that we're still above 1250. Resistance is still going to be the same, 0108. Right here with the Swissy. Support on a short-term basis is going to be par 49. The dollar CAD is interesting how we've paired back to this 32.12, and although we've come off of it nicely, it certainly looked like, especially as well as the dollar had done after that strong Canadian jobs report. We finished down here looking, okay, they're going to try and make a push up here. And I was look at my chops if we got up here at 33.66. And lo and behold, I mean, we slid and we slid, and this one now it's interesting. We've defended this 32.12 now, and that was a good buying area. And I remember as we dipped into the jobs report, and I talked about that yesterday, when we took that dip, I mean, it was 32.28, I believe, was the, I don't know if it was a 38% or whatever it was, and it almost made it there. It came up short by about 3 pips, and I was thinking, okay, I'll probably even overshoot it. I'll step in, I'll buy it there at 32.28. I think Amanda was trying to buy it there too, and then the market turned around and rallied up. It didn't rally up, it just can't rally up to, I think, around 50 and then pull back, and then to about 38, then rallied up higher to around 57, then edged back a bit. And it looked like this market really had defended itself after a strong Canadian jobs report, and it looked like we could move towards this. So we talked about ultimately, if you're looking for a target, it'd be the 34.18. But I was thinking here at 33, you have 33.54, you have a 50% nice confluence here. And it looked like after this, the market might edge back a bit, and then we try and work up a little bit higher. But since we actually pulled lower, which is surprising considering how well the dollar's done, and we haven't made a move higher. So it's interesting to look at it now. Resistance at this point now is going to be 33.08. We'll give it a little bit of extra room here. And that might be a bit generous for now. And support, we put 33.03. And we're going to go and leave that here. We'll go and take a look at here on the 2-hour chart. There's that 57 we talked about yesterday as our resistance, and we're having some struggle with some issues there, but we have 33.03. That might even be a little bit generous here. I was going to call it right here at 32.91. And we'll still stay with this 32.03 with the support here. Let's go and take a look at crude. Wow, unbelievable this we've made this run up in here. Well, yes and no, because if you think about how well the S&Ps are holding up. $54.70, almost right there. 50 looks like $54.71. You can see we've made it right to the 78% here at 54.65. But on that closing, we had 54.71. We're going to go 54.71 for our resistance on crude, but we are here at the 78%. with support coming in at 53.89. I guess it's this move here in crude oil, which has certainly been supportive for the Canadian dollar, and why the Canadian dollar CAD hasn't been able to push higher here. Pretty amazing, this move, and we talked about this yesterday also, is that, look, we have shifted into a buy mode here in the exponentially moving average, which makes it a little bit tougher to go against here. A little bit of a stretch here comes in right there on the daily, 1136. Actually, I was been talking about this this 1095. Well, this is a level, if they try and make a run to it, it's showing us 1036. That's a level I don't mind saying, you know what, I'll step in and I'll take that one just straight up. This 1095 that we talked about, and that's a good level for them to go to. And they were still trying to struggle, but at least I'll tell you, let's put it this way. You know what your risk level is, but I tell you what, we see 1035 there. I'm not asking any questions. I'm just going with that. There's 1037, even a little stretch up in here, which is right there. That one's actually 1044. So where it could stretch, this 1095 is a very good level here. You can see that going across, and you can see the market struggling. Well, if for some reason on the S&Ps, and we've already come up to, I pointed out to you, 2762. We actually visited it just a little while ago, took out yesterday's highs, and we're pulling back. But at least you know where your risk level is. Let me say, and I kind of mentioned that in Asia because we were talking about the 1095, and this market kept wanting to move higher, and it looked like eventually it's going to get to 1095, and it certainly did. We actually opened up early in Asia and hit 1103, and then quickly paired back. Got down to, I think it was 1085, and then we popped back up again. We actually, when you look at this, I think we got up to like 1114 or so. Right up in here, and then we dip back. I actually got, let's see here, yeah, right in here. We came back and we came right back, came up a little bit short of that. We're trying to push a little bit lower. This market is really stretched here. I like that 1095, but as I was mentioning to one of the guys, is I go, let the market prove itself. Let it tell you it's tired. Because like I said, you came in here and sold 1095. Now, we did dip down here. What was it? We came down to, was it 1086? But we've rallied back up, and you're just kind of sitting there waiting and waiting. And that's what I'm saying, is I've been the kind where I sell immediately against that level, and then I have to sit it, and kind of flat. Maybe I'm up a little bit, then I'm down, then I'm still down, then I'm still down. Eventually, by finally I get the payday, I'm tired of waiting. I'm like, okay, well, I'll get out here, and then eventually, now that the momentum has changed, now we see the bigger fall. So that's what I'm saying, is let the market prove to you. But like I said, when we look here on the daily, look at that right there, 1036. And we do have if you look at it on the 2 hour, it comes in at 1038 with another level at 1044. But you know your risk level. We've really come quite a bit. Keep an eye on this S&Ps to see how it holds up. We're here at the 1095. Look, we have to respect where we're at right now, and also that we just crossed, and that, remember we were talking about that yesterday, so it allowed for a little bit more juice to the upside. Look, I like this 1095 here, but you got to respect the level. So where would the resistance come in? 1036. I'm happy to go and take it on against that level there and say, wow, you got some really good, if the market wants to push beyond that. So let's go with 1136. And that's just the level. That's it. It's not so much that's going to get there, but at least you know where the risk level is on that against that 1095. So it's 1036, and that's a daily close support, daily close resistance. I apologize. Now, when we're looking at it on support, well, you see it right there. Support comes in right now at 1062. Now, if we do get a rotation lower, the first target, the real target, is going to be 10 for starters would be 1038. So you're talking about a 60, good 60 pips lower. But I mean, there'll be a pause here, but the real target would come in. Actually, it'll be coming in right about 1036. But our support's going to come in right there at 1062 on a short-term basis. We'll see. We should see a bounce off of that area here. But let's watch this here. If, like I said, I think this is a very good area right here. This 1095. But let the market. It's waiting here, and essentially the market is just kind of sitting there like it's getting like a little trying to think like a little rowboat. It's going to be tugged by whatever the waves take it. So if we push higher here in these S&Ps, the waves are going to take it up beyond here to these highs, and then we would probably run out of gas in that 1136 area. Or if we can start to, weaken a little bit here in the S&Ps, okay, we're going to make that move lower, and then you'll just decide as far as momentum if we can go on a break here. But like I said, it's 1095. This whole area is not bad. At least you know where your risk level is here, and I think we'll get some good solid resistance right in there. But right now, we're just like that little boat, and it just depends on the waves where it takes us for right now on a very short-term basis. Now, let's take a look here with the Aussie yen. Well, we've really pushed hard. Now we're pulling back. You see, we're paring back. Remember, as I pointed out to you, you see where the S&Ps made this little run higher. We actually took out yesterday's highs here, and we finally triggered this 2762. And I posted that level in the chat room yesterday. You can see that 2762. So we've hit it. We actually hit it just a little while ago, took out the prior day's high, and now we're edging back a little bit. Well, henceforth, we're seeing the Aussie yen going, hey, I'm not, we're not rallying. This is it. This probably as good as it gets, they think. Could be. If you look at it, we're already off nearly 40 pips from this area here. Interesting now. Now we're starting to look a little bit interesting here where maybe you could, grab yourself on some scalping now here. Oh, look at that here. Boy, it's been a steady stream lower here. Look at that on the 5-minute. Although I have to say there wasn't a particular bar structure other than we got a little bit overstretched here. Not much of a hanging man, but we have rotated lower on the thought that the S&Ps have probably milked this thing and stretched as far as they can. We've been working steadily lower here. Resistance comes in right now at 79.07. I call it 79.08. Well, that's going to be your initial support, 78.64. But we've already seen a pretty good pullback, and if we do see the S&Ps pair back, and they're open to that, I guess they're just waiting for those China talks, just like the Aussie is. We'll go right here with 78.49 for support. Let's move into the dollar index. Well, this is a target they want to go to. So 97.64. And I thought yesterday was going to be a very, very interesting day in the sense that I thought the bulls might have got themselves stuck. And after the breakdown, I thought, okay, well, now they're going to use any kind of rally. And remember, we actually had back here. We actually had, I think it was 96.94. We'll take a look here. Yeah, 96.94. I thought, boy, if they can get that back, oh heck, yeah, they'll go for that. Well, heck no. They went to that and beyond on a very, very good move and pushed even further. And I thought, okay, this is probably as good as it gets there, and they'll take a pause. But no, they kept on pushing higher. And we're trying. We did talk about when we came on the air, and I mentioned this in Asia, some initial resistance at 97.31. Well, look, when you look at this, and we talked about 46 here, but this is where the market wants to target for right now. It's the key resistance is 64. Right there. There's a little bit of resistance here at 46. 64 would break it out. This 46 is probably going to coincide if the euro were to make it down here to 34. So we'll go with that. 64 would really break this thing out, but support comes in right there at 96.70. 96.77. It's actually even have a little bit more right here, but if they break down here, it's going to be right there. 96.82. We'll go with 96.82. We saw a good little pop here in the gold market. And I'm putting that in the room when it actually already started to take off. Then we end up giving that up. And they really popped the stops here. Remember, we had the 13.15. It's been sitting there like for days, I guess, since the start of the week. And we get up there, popped the stops, and turned around and came lower. And really now we're reflecting what the dollar's been doing now, because we came up here, and I'm surprised. I'm not even sure what actually triggered this, but we came into a little resistance level right in there at 13.18, and the market quickly sold off. And now we pushed lower because what happens is we triggered the stops. Anybody that might have got pushed long now found themselves underwater quickly and pushing it for all it's worth. So the resistance, the support, at least on a short-term basis, and that's short-term because I think we could push even lower, is going to be the 1303, which we had before. And resistance you can see coming in right there at 1312. Actually, you can even push it lower right here. And he moves back up here right now for 13, we'll call it 1311. And we'll go and move into the buns. Well, we did get that, and we do have data coming in at the top of the hour right here. Eurozone employment, unemployment flash coming in at the top of the hour. GDP flash. Well, this is going to be right up here at the top hour. See what we do, and obviously potentially a good move here in the buns, especially with the concerns they have. Resistance. $66.23, but as I mentioned, but if we get some, further erosion of good data, erosion of that data, which was good, but it's eroding away. It would be 66.30 here on the buns. With support coming in right there at 65.99 for right now. I think even if the news was good, it'd be faded, at least in the buns, I believe. Let's go move into the DAX. Nice move up here. We're obviously, benefiting from the move in the S&Ps. If we would get this push in the S&Ps, that's if the resistance would come in at 11,289. Let's take a look at this on the fib. Well, look, there's a 78%. We almost made it there, and just a touch here, that'd be 11. Let's call it 11,285. And support for right now is going to be there at 11,126. We'll see, because like I said, if the S&P were to start to rotate later, we'll go right to this. But at least initially, support's going to be 11,126. Oh, and happy Valentine's Day to everyone. See the dollar just starting to ease back in here. Let's see if the dollar index will tire itself out a bit. Euro trying to hold its own. This is just an interesting move here in the euro, because as I mentioned, is after bullishly engulfing, now we turn around and bearishly engulf. And then on top of that, we close below this 1286. And man, this was just open for us to just smash through lower. We even started out the beginning of Asian trading, pushing past 1250, and then no follow through. And that was, to me, the most interesting thing. And then we came back, and then in the Asian analysis, hang on one moment. In the Asian analysis, and we're looking for 1298. And we did make it up here to 1295, but that's it. That's it right here. So it's going to be interesting to see what we can go, if we can go and continue to push this thing further. So we shall see here. But we're going to get the bias chart posted. Thanks for joining us here on Valentine's Day, and we'll see you in the chat room.